For more on the markets, let's bring in Steve Eisman. He is host of the Real Eisman Playbook podcast and former senior portfolio manager at Neuberger Berman. Steve, it's good to have you.
Thanks for having me.
Weigh in, I guess, here on this, how this affects, if it does, the macro. It's interesting when you talk about, are they going to be more tolerant of inflation? I've always been of the mind the equity market's not going to freak out about inflation unless the bond market is. The bond market's pretty subdued. It got to the right spot here, and it's not really moved that much since the 25 basis points. So I just think, what's the broad setup?
The broad setup, I think, is actually pretty benign. I mean, the economy is pretty good. The employment situation is a little weak. You know, the AI story continues. Nothing seems to be going to stop that, especially after Oracle last week, which was pretty powerful. And, you know, the Fed on the margin will do this, it'll do that, but it doesn't really matter all that much. Maybe that'll help housing. So I'm pretty bullish. Yeah,
it's interesting that for as much of the friction and the back and forth about, pressure on what Fed should do, shouldn't do, kind of the data converged with people's objectives of where you ultimately wanted to get to here. And it seemed like it was more of a legitimate consensus that this is the spot we're in.
But at the end of the day, the the Fed's going to cut at the end, I think, is 100 basis points total. And then that's it. Yeah. So, this is not Moses coming down with the tablets.
Exactly. It's not make or break.
It's not an aggressive Fed cutting period. It'll be tinkering. It'll help the housing market on the margin. It's not going to drive the housing market insane. People still are stuck with their 3% mortgages. So the existing homes will get unlocked a little bit, but not too much.
Older people aren't selling their houses.
They're not selling their homes.
Locked up market.
So I think the economic situation is roughly the same.
What you lay out is interesting because in the market's memory, we did this a year ago, right? So, July, people thought we should have cut in July. We didn't. They cut in September. There was 100 basis points total cuts between September and December last year, in an economy that maybe people thought was decelerating, and it turned out we picked up. And so I guess maybe that's the model that you can just use to say that this can be pushed along.
I mean, look, the biggest story is still AI.
Yes.
There's no question. That's what's driving the economy. That's what's driving stocks. That's the most important thing that I focus on.
Does that remain benign in terms of the volume of investment, where it's being invested? Is it redundant investment? Are we getting overheated, or is this just still early?
I think it's still very early.
Yeah.
The big part of the story now is the hardware. The question is how much is this going to hurt software companies, which certainly the charts tell you that they're hurting. Whether they'll be able to come back, we'll see.
Yeah.
And the sort of the interesting part of the story to me is power, all the various power parts. The fact that we're talking about nuclear, if you said 10 years ago that we would be talking about nuclear or anything, I think is pretty shocking. You've got companies that are starting to make small nuclear reactors that they're going to put right next to data centers. So, the power part of the story is very exciting.
It's interesting. I keep asking what I know is a naive question, but if power is the ultimate constraint to how this all gets built out, is it not going to be just the $1 trillion bonanza to figure out how to do things in a lower power way? I mean, in other words, are we going to try to figure out the engineering workaround here? At some point we built too much broadband. Are we going to build too much power? Not too much broadband for the world, too much to be profitable.
So early.
Yeah.
I just don't think it's possible
you don't have to worry about
question.
It yet? Yeah.
Not yet.
Yeah. And you're still finding kind of like ways to play these types of things that seem, interestingly priced?
Look, I own mostly what most people own, with some odds and ends here and there that you've never heard of.
Sure.
But 90% of my portfolio is every single name.
Yeah.